Hey everyone, Dalton Grados, Grados Capital here for our pre-market newsletter looking at the week ahead. So if you're just watching this on YouTube, I have a pre-market newsletter that I've been delivering to the email box for free. You can subscribe at the link in the description. And if you read Friday's newsletter, I'm moving it from a daily pre-market newsletter to now a weekly pre-market newsletter, most likely going out on Sunday evenings or Monday mornings, and it'll be just more in depth. Some of these daily newsletters would be super simple, like, hey, we're just consolidating in range, play the range. And so, in order to cut back on time and obligations that I'm required to, but still provide some value, still keep everyone updated on the markets every week, I think a weekly pre-market newsletter that's a little bit more in depth, starts with the higher time frames, goes to the lower time frames, looks at the fundamentals, the events coming up for the week, I think will be very valuable. So you could, of course, subscribe here on YouTube and also subscribe to the email newsletter so that this will be delivered in your email inbox to prepare you for the week ahead. So what we're going to do here is we're going to start with our charts and then look at some fundamentals. We have actually Fed coming up this week. But we're looking at the SPX cash index here, weekly chart, obviously straight up. And if we also go to the NDX, we see that the NDX is really pulling much stronger. NASDAQ really being led by NVIDIA, of course. So NVIDIA, if you've been following the market, of course, you've seen that it's really been driving the gains in the markets recently. In fact, NVIDIA this past week just passed a $3 trillion market cap, which makes it now on par with Apple. And as we know, Apple, tends to lead the market as well, especially the NASDAQ. Now, what's interesting with NVIDIA is this week, so on Friday, on the 7th, June 7th, NVIDIA announced after the trading day closed, it is going to be doing a 10-for-1 split, right? So it's going from here we can even see it in this chart, it's taken effect. It's going from $1,000 a share to $120 a share. So obviously, this doesn't mean anything in terms of the value of the stock, but what will be interesting to keep an eye on this coming week is how investors are reacting, how the shorter term time frame players are going to react to this stock split. And if we get a pullback in NVIDIA this week, then we could maybe see a pullback in the overall market since it's been such a strong driver of the market rallies recently. So with our newsletter here, we've typically done on the ES futures, and so we're going to continue that because that is assuming that we're trading the S&P futures. So if we go into a daily chart, well, actually, let's look at our levels later. Let's first bring up what we've got coming up this week. So we'll get into some fundamentals. All right. So Monday, nothing. Tuesday, nothing. Wednesday is our big day. We have our CPI data in the morning, and then our Fed, FOMC, federal funds rate, FOMC economic projections statement, and of course the press conference afterwards. So it is a Fed week. If you are day trading, you should probably know that the market tends to be a little bit choppy on Monday and Tuesday, because it's waiting for all of this data on Wednesday, and then we get some clearer price action in the later half of the week. So that's just how I'd plan to approach this week as a day trader. Now, more on the overall kind of market outlook for the longer term traders, the longer term investors. Sorry, that's my phone. I should put that on silent. Okay. So for the longer term investors, what we've seen has been kind of interesting because the Fed rate has been anticipating cuts, and then we've gotten less and less optimistic on the possibility of cuts because inflation has been sticky to where it's not really going up, but it's also not really coming down either. So we see this has been our CPI, of course, coming off of its peak. So thankfully, inflation has been coming down a little bit. But you see here, really been kind of in this zone the past many months. I mean, this is going back to, last summer. So pretty much in the past year, it's been pretty sticky. And so in order for them to really justify rate cuts, we need to see inflation come down more, right? Now, what's interesting is we had the Bank of Canada and the ECB, the European Central Bank, announced a rate cut last week, which is super bullish for the markets. And so our Fed may have to, keep up with that. So they look, obviously, they look at more than just inflation. They look at a number of factors in order to cut rates. But, they may be influenced by the fact that there's rate cuts happening in other parts of the world. And so it'll be very interesting on Wednesday, this Wednesday, June 12th, to look at and see what does CPI print as, and then what does the Fed say in their conference. So they're forecasted to keep rates the same for now, but what will the press conference be like? Will they be more dovish or more hawkish? And that will be really what we're looking towards in terms of if we experience a potential rate cut later this year, or if it's not until next year. That will really determine the future sentiment for the market. And as day traders, of course, like I said, market's really waiting on this data to come in. So now let's go ahead and look at our levels. So if I am on the ES futures daily chart, I would obviously, we are kind of coming into an area of support around the 5350s. So kind of like this zone here, filling in the gap on the daily chart. So in the newsletters, I talk about these gaps a lot, right? So when we have a big rally like this, there's this gap between here and here that could potentially be filled and is being filled on the S&P. All right, breaking down to the 4-hour. I like using the 4-hour to prepare big levels for day trading throughout the week. So this zone, really between this zone represents that fair value gap on the daily. So pretty much like 53 teens up until 5350s would be a good pullback area. And then, of course, with the upside levels, there's not a whole lot to say because we are at all-time highs. So it's kind of like unexplored territory. We don't really have resistances to the upside other than like big obvious numbers like 5,400. That would probably be the next target to the upside. So really we're just identifying gaps on the downside where we could go if, again, we get maybe a hotter CPI or a hawkish Fed, and or NVIDIA pulls back this week due to the split and sort of the lower time frame traders pulling out. So those are really the main three fundamental factors I would look at this week, and kind of determine the levels from there to play off of. So 5,300, obviously a big level below that, right? And then this level down here is going to be where we really get like a big shift to the downside. That's, down in the 5250s would be another big support. And then below that is, below the 5250s is really where we could see that the highs might be in for a little while and will be in for a much larger pullback at that point. All right, so those are the levels I'd mark for the S&P. For the NQ, because I do like to trade NQ futures too. A little bit similar of structure, right? So we have this gap again. Always like to highlight our gaps. This would be a good area for the market to fill on a consolidation or pullback. For the NQs, that's going to be down to around the 18,800 area. And then, of course, the 19,000 mark is a big mark that we breached last week and will be on the lower time frames an area to hold. Right? So those are the two main areas I would look at on the lower time frames for NQ is going to be 19,000 and 18,800, kind of in that range. All right, so I don't want to make this too long, but hopefully this is helpful for kind of showing you what to look for in the week ahead. Again, Fed week, so trade lightly. Expect consolidation on Monday and Tuesday this week. Really look for that CPI and Fed data and the Fed sentiment in the press conference on Wednesday to determine kind of where we're going forward. And if you can't believe if the market ends up trucking on higher and higher, and you are having difficulty believing that, well, don't fight it. Okay, this is the reason why I like to start this newsletter with the charts. And focus more on the charts. One is because we're sort of operating on a shorter time frame, right? But the other reason is that when we look at fundamental data is important, especially for longer time frame and investing. But even still, the charts don't lie. The charts are really the fundamental truth of the market. And the classic example I would give you is COVID 2020, right? You had a million reasons to be bearish on the market. I mean, everything in the news was, and I know a lot of bears that got destroyed. But in terms of bullet points, if you wanted to list out a bull case and a bear case in 2020, your list of bullet points for the bear case might be longer. But the thing is, it didn't matter. The market went up, and it went straight up, and it went straight up for like 2 years. And so, regardless of what opinions we may develop on the fundamentals, we have to respect what price is doing, because that's what's gonna matter at the end of the day when you are taking positions, right? So I hope you enjoyed this newsletter. Subscribe to the channel, subscribe to the newsletter, and I'll see you guys next week.